So when we are trading, or the guys who trade price action or pure price actions, a lot of guys, they focus on patterns, on these patterns, right? uh it doesn't matter the strategy that you trade, but you're gonna find today that patterns are very important, they are crucial. So we are going to learn about patterns with their variations, right? So most people, they know the basics of the patterns, they know the basics, but today it's gonna be crazy. We're gonna learn something that is very, very, very special and important, and I hope it's going to change your trading style. Okay, so what is a pattern? A pattern refers to the systematic behavior of price action, mainly in area of value, which I call the psychological areas, right? So the kind of patterns that we have flags, wedges, channels, double tops, double bottoms, the head and shoulders pattern, right? I hope you are familiar with these patterns, guys. Why do patterns form in the market? This is very, very, very important. So patterns form in the markets because people are repetitively doing the same things over and over again, right? So every day people, they are trying to buy low, they are trying to sell at the highest point, right? So by doing this, it causes patterns to emerge in the market because we are doing the same thing over and over again, right? So it results in a pattern formation, right? Patterns form in all time frames, but the bigger the time frame, the higher the probability of that pattern playing, right? So it's very, very important that you understand that when you are dealing with patterns from larger time frames, right? When you're dealing with patterns from the larger time frames, those patterns, they carry more weight, right? They have the highest probability of playing out. It's different from a person who is looking a flag on a 1 minute chart or a 5 minute chart. Yes, it can play out, but the probability of that pattern compared to the probability of a pattern forming on a higher time frame, it's very, very low, right? Let's move on to to the rules of trading these patterns. Okay, so these are my own rules, right? But I hope they will help you. The first rule: always make peace with the fact that a pattern can fail to play out due to the unknown variables in the markets, right? Let me explain a little bit on this one. So we have this common problem in traders, right? When we have discovered that something always plays out when it happens in the market. So we start thinking that every time when we see a certain pattern printing on the charts, it's going to go in our favor. It doesn't work like that. Why? Because we have the unknown variables in the what? In the markets. We understand we are dealing with probabilities and anything can happen, right? So already we are having a different mindset from these other traders. Okay, so it's very important to have that mindset to stay neutral so that when the pattern doesn't play in your favor, it doesn't hurt you emotionally or financially, right? Your risk is always controlled. So it's very, very important. Okay, the following point is do not trade a pattern in no man's land, right? What do I mean? I mean, don't take don't trade a pattern outside a psychological area, outside psychological areas or areas of value, right? So you can see a flag forming in the middle of nowhere, right? And you may take it. and it might play out, right? But what is the probability of those flags that forms in random areas playing out? It's very low compared to those flags that forms in psychological areas or areas of value, right? Those ones, they have a high probability of playing out. So do not trade patterns in no man's land, right? Unless you know what you are doing, okay? So the next point is trade in line with higher time frame structure if you are a beginner. So it's of paramount importance, right? If you are still new, you're still a newbie, you're a beginner, it's very, very important that your patterns, they have to be in line with the higher time frame structure. For an example, if you are saying, okay, my structure is telling me that we have to buy. So if we are going to buy, what are we looking for? We are looking for continuation patterns that take price to the what? To the upside. We are not looking for what? For reversal patterns. Okay. The next point, trade the third touch or the near miss of the third touch or the double top or double bottom close to the third what? Touch area. Okay. This point I will show you on the charts so that you understand what I'm talking about. Okay. The next point, continuation patterns have the highest probability of playing out compared to reversal patterns. Okay, so we have backtested the markets and we have seen that when you are trading continuation patterns, your win rate is more than that of a guy who is focusing on what? On reversal patterns, right? Why? Because there is a saying that the trend is your friend until it bends or until it changes the direction, which is very true. So when you are trading continuation patterns, you will notice that you will be more profitable, you will make money, but it doesn't also necessarily means that it's bad to trade reversal patterns. No, we trade them, but you have to know what you're doing. Okay. So today we want to quickly jump into chart work so that we can see what we are talking about. So pattern identification on charts. So as I said, we have flags, we have wedges, channels, double tops, bottoms, head and shoulders. There are a lot of patterns out there. So today I'm not going to open the charts for currencies, right? Today I will stick to the volatility indices because I have been having so many questions from people saying, do your strategy work on indices? Okay, let's find out today that does it work or it doesn't work? Is it effective or it's not? So today we'll be looking at MT5. We'll be on MT5 today. Okay. So we are on V75, volatility 75. So the first thing that I've said, or that I always say, is we are looking to trade in high value areas or psychological areas. These are what? Our order blocks. These are our old highs or old lows, right? We are looking to trade in line with what? With structure, right? Okay, so you should always know those things. Okay, so we have different types of patterns that we have, right? As you have seen on our notes, we have different type of patterns. Okay, so we want to focus. Firstly, we want to focus on let's focus on channel and wedges. Okay, to those who do not know, let me draw. Let me just draw so that those who do not know, I'll just draw here. Okay. Okay, so we will start with channels, right? So on channel, we are having two parallel lines like that. So that one, we call it what? An ascending channel, right? And we have our price action, one like that, right? And we are looking for this break to the what? To the downside, right? So on a channel, what we are saying is we are having the first touch here of the upper trend line, we are having the second touch here, and we are having a third touch there on the what? On the trend line, right? And we are saying that the highest probability where price can turn is there on the what? On the third touch, right? But the question is the third touch in line with the psychological what? With the psychological area, right? Which means, are we on an order block, right? Or are we on a support? Are we on a resistance? Are we on an old low? Are we on an old high? Those are the questions that you should what? You should ask yourself, right? Because we are not taking these channels in random areas. No, we are not doing that. Okay. So let me remove that one. To those who that's an ascending channel. So it will come with its own variations, right? So you will see like something like this, okay? Some they call it a rising wedge or a falling wedge. Names do not matter, but you will see something like this, but the same price action inside there. Then we're still looking for the what? For the break to the downside, okay? That's the other pattern that we have, okay? So names, they don't really matter about these what? About these patterns, right? So I said we are starting with channels and those wedges, right? Okay, so let's go to our charts. We are on V75 H4. Okay, let's go on the daily of, okay, right. We are on the what? We are on daily on V75. We are on the daily on V75. Okay, so we want to start to focus. Let us do this. Our old high there. Okay, so we have I just marked our old high there. That's the old high on this here. This is our old high. We have marked the old high. Okay, so we are looking for price to come again in that area and sell off, right? Okay, we should have just a small or just a nugget to share with you guys. Do not trade equal highs, do not trade equal lows unless a pattern is involved in that area. Okay, you hear me? Do not trade equal highs or equal lows unless a pattern is involved, right? Let's say this is our resistance, right? We have our line there, okay? Look here. I want you to see this. Price here, price respected. You can see, let me take an arrow so that you see. Okay, so you can see price here respecting our what? Respecting our resistance, right? It's a more of an equal what? Equal high. And after that, you can see breaking the high there, then shift back inside the what? The pattern. So we had traders selling in here, selling equal highs, and boom, they break out of structure there, then they shift inside the pattern, right? Okay, so you do not trade equal highs or equal lows unless the pattern is involved. What do I mean? This is the pattern that we have, right? This is, you can call it a channel, right? You can call it a channel. Okay, so we are having our first touch there. We are having our second touch here. Then we are having our third touch here. Okay, so I am saying that the third touch has the highest probability of price playing out, right? So this is an ascending channel, right? And we are saying price has to push to the what? To the downside. We are not going to learn about entries today, but we want to see, what we want to see is the patterns. We want to be able to identify the what? The patterns. So we can see that we are having a what? An ascending channel. And look how V75 sold off. It was a very, very beautiful sell on what? On V75. Okay. We have finished on that pattern. Let us focus on more patterns that are forming on what? On V75. Okay. So I would come here on V75. I want to focus on this price action. I want to focus on this price action here. I want to focus on this price action, right? Okay. So let's say we want to take a trade, right? So we are having, okay. So we are having, this is like an old high. We are having this high, right? We are having this high, right? Okay. So we can see that price didn't reach that high, right? Okay, which is okay. But I want you to see something here. I want you to see something. We are having our order block here. So this is how I draw order blocks. To those who do not know how to draw order blocks. So I don't take my order block. If I'm in the downtrend, I don't start from the bottom of the order block. I start from the body here, right? Let me draw my order block. So I start from the body there, and I focus mainly on the wicks there in that area up until to the highest point there. So you will see most of the times I will not be putting these rectangles. I will just focus on the highest wick here. I'll just focus on the highest wick there. I'll just focus there. Then let's move to a smaller time frame so that we can go and see if we are having a pattern that is forming in that particular area, right? Okay. So if we take our trend line, we draw a trend line here, and we know that the third touch is the highest probability of what? Of playing out, right? Okay. Let's do this, guys. Look, guys, look at that pattern that is forming right there. Okay. So we know that there are these guys, right, who trade equal highs and lows, right? So this is our resistance. We can choose to say that's a resistance. Price came and respected. People started selling here. It sold off. Yes, it sold off, right? But then price pushed up again for a what? For a third touch, right? So what are we looking for? We are looking for the third touch. We are looking to trade the third touch of the what? Of the pattern. So we are focusing. What are we focusing? Focusing on patterns. But where are they appearing, these patterns? They are appearing in high value areas, right? Our high value areas are order blocks, support, resistance, things like that, right? So like I said in the last Zoom, it's not about just price approaching the area of value, but it's the way how we approach the area of value. Are we approaching impulsively? Are we approaching correctively? When we are approaching correctively, are we forming a pattern, right? That's the most important thing. So if we are approaching in more of a pattern, there is high probability for price to turn in that what? In that particular area. So we had a beautiful, you can call it a channel, you can call it a wedge, whatever you want to call it. But we had a beautiful pattern on this order block, and it showed off beautifully. So today, I'm not going to talk about the entries, right? It's another story for another day. But I want you guys to learn to open your eyes and see these patterns as they what? As they form. Okay. Let's move again to another point, right? Let's move again. There are a lot of patterns that the way they form, it's I don't know how to describe it. Okay, so we are having this order block, right? We are having this order block here. We are having this order block there, right? We're having this order block there. Okay, let's see what kind of a pattern are we having in that area. Let's see, guys. It's very interesting. Let's see if we draw a trend line there. We draw a lower trend line here. Okay. Okay. Look at that, guys. Look at that. How beautiful is that? We are having our what? We are having our order block in that area. We are having our first touch of the trend line is there. Our second touch of the trend line is here. Our third touch of the trend line is there. Okay. And we are looking to sell off on the third touch of the trend line, right? But we are not saying that soon after price reaching the third touch, we sell. No. It doesn't work like that. We have rules that we follow. We have things that we look for, right? As I said, we're not looking for entries. We are just learning how to identify patterns in areas of what? In areas of value, right? Why do you think this pattern played off to the downside? Because it approached the area of value. We approached the area of value, which is our order block, in form of a what? In form of an ascending channel, right? So price had to play to the what? To the downside. Okay. I still remember, let me explain something here. Let me remove this order block. Let me remove, okay. I still remember the last Zoom when I say, do not marry your trend lines, right? So the mistake that we do is when price, we have the first touch there, the second touch there, right? So we want price to respect the third touch and push to the downside. We don't want to see price moving outside the trend line there, outside the trend line there, right? We don't want that, right? We are just looking for price inside the what? The trend line. Guys, it doesn't work like that. It doesn't work like that. You will see price coming out of that trend line, right? Coming out there, and you will be like, the trend line is not valid. The trend line is not valid. Why? Because you're marrying the trend line. We do not marry the trend line. If price goes out of the trend line, it doesn't necessarily mean to us that the trend line is no longer in use or is broken. No, we just know that these guys, they are playing with people's emotions, feelings, and what price will shift back into the what? Into the pattern. That's if there is an what? An order block. That's if we are in an area of what? We are in an area of value. Okay. So that's a beautiful pattern that is forming in that area. Okay. Let's exhaust all the patterns that we are seeing on V75, and we move to another what? To another page. Okay. I hope some of you are starting to see these patterns forming. Okay. So there is another beautiful pattern that I'm seeing. I don't know if you are seeing the pattern. Let me show you if you are not. Okay, so let's take this order block here, this small order block here, this H4 order block here. Let's put it here, right? So I say that usually I just mark the lowest point of the what? Of the order block, the lowest point of the order block. Okay, let's mark the lowest. So we are taking that, right? That order block. Okay, the question is, how did we approach the area of value? Very simple, guys. Simple but effective. Okay, let's draw our lines and see how we approach that area, right? And see the power of patterns. It's all about, it's all about patterns, guys. These things, they repeat themselves. Why do they repeat themselves? Because we are looking for the, we are looking, we have a common goal. We want to buy low, we want to sell high, and they will appear. Look how we approached the area of value there, guys. Look look at that pattern that is forming on the area of value, and look how price shot to the what? To the upside. Look how price went to the upside. It's crazy, guys. It's crazy. It's something else that if you understand how the patterns plays, just imagine we are on V75, right? We are on V75, right? Okay, let's say you took, I said I'm not going to stress about entries, right? Let's say this vertical line, this this horizontal line here that I've put here, let's say this is our entry, right? And we have a rule that 90% we have to fill back, we have to fill our pattern prices to go back there to the top of the what? Of the pattern. Let's say you have taken this buy here, this is our entry, right? Okay, and this is our take profit there, right? The pattern being completed, that's our take profit, guys. Let's see, okay, let us put our stop loss. Okay, let's say our stop loss is just below the what? Just below there. Okay, let us calculate together, guys. First of all, let us calculate our what do you call that? Our SL. Okay, so here's how you calculate your SL. We are saying this is you say your entry, our entry is what? Our entry is 644. Let me take my calculator. We're saying 644 8 1 6 comma 61 minus our stop loss. Our stop loss is what? Our stop loss is 6309 19.99. All right, then let's multiply by the smallest what? By the smallest lot size. Then we say multiplied by the smallest lot size is 0.001. Okay, right? So our stop loss is about $13, is 13.8. So that's, we are saying it's, let's just call it what? $14. So we are risking $14. Let's say we are risking $14 there. Let's calculate our take profit. Our take profit. So our take profit, we say the highest number, the bigger number, that's our take profit there at the top there. That's 729,880. 0.84. So we say take profit minus entry. Our entry is 644,816 point what? 61. Then we multiply by the smallest lot size, 0.001. We are making 85 US dollars by just risking 14 bucks, right? So it's something else that is that will change your life, guys. Just imagine risking, let's say, 14 bucks and your reward is 85 bucks. So we are saying that if we say 85 divided by 14, it means it's a 1-to-6 trade. It's a 1-to-6. Our risk reward ratio is 1-to-6, which is a lot of money, guys. Okay, we are just talking about the smallest lot size. Okay, so let's move on. We want to see we want to exhaust all the patterns that we are seeing on on V75. Okay, let's look at this order block, guys. This order block here on this horizontal line here. Okay, as I've said, I draw the lowest point. I usually like drawing the low. At first, I go and see the area in which my order block is, but I like drawing the lowest point. I just draw. Okay, so I like putting a ray line. Unfortunately, we don't have a ray line on MT5. Okay, so that's the lowest point of our order block there. Okay, so some are being shocked. Why is V75 be buying like this? It's simple, guys. These patterns, they form now and again, right? The problem is that they have variations. They vary. They have variations. They vary, but they always form, and they will always be there. They have always been forming. Okay, let's look at that pattern, guys. Let's look at that pattern. A very beautiful pattern. We had our first touch there of the lower trend line, our second touch there, then we had our third touch there, right? What else do you want? What else do you want, guys? So far we are looking at what? These are continuation patterns, guys. These are continuation patterns. You can clearly see what I was teaching you the other day when I was saying price moves in impulse. Look at that impulse, guys. Look at this correction. Look at the other impulse there. So it's clear. Impulse correction, impulse correction. Okay. So now I want us to move to another pair. I think we had enough on V75. Let's move to another pair, guys. Let's move to another pair. Let's take, for instance,